Imagine if you can only buy 5 dividend stocks. How much more time, energy, and effort would you then put into your research to make sure you're passing up the duds for the real diamonds in the rough of the market? Well, as for me, someone who literally made a massive mistake in loading up my dividend stock portfolio way back when I first started dividend investing, I'm now here to say you got to ask yourself a question. And it shouldn't just be some silly exercise that you're doing or thinking about because you watch some goon here on YouTube talking about just 5 dividend stock picks. It should actually be a question that you take seriously and then, more importantly, follow through on. Now, I can tell you after doing a lot of my work on my portfolio to ultimately get it down from about 40 plus holdings that I once held to half that size, I didn't even stop there. I only proceeded to trim down my portfolio to the now 10 holdings, which include 2 ETFs as my investment foundation. So really now I'm talking about 8 individual stocks all in all. But now I am here to actually swing back around to some words of wisdom that helped me out way back when from an iconic investor that I really respect, Bill Ackman. When he once shared that at any given time, there are really only ever a handful of high quality investment opportunities for all of us to take advantage of. He then proceeded to share that doubling down on your highest conviction stock picks, though definitely more volatile at times and unnervingly uncomfortable sometimes, it will lead to more lucrative returns. And now I'm here to say that's been my exact experience. And if I didn't get real with myself in that over diversifying isn't necessarily as safe as you think, but rather kind of makes you more of an idiot, I wouldn't be where I am today, outpacing the S&P 500 by about 3% as of this past year, returning over 26% on the year, working out to about $40,000+ in 2024 to sit on over $237,000 in my brokerage account today. So what am I about to do for you is gift you with my 5 dividend stock picks that I personally would invest into if I can only just pick 5 dividend stocks. Heck, even if I had to boot the ETFs as well, these are the all-in dividend stocks. And come the end of this video, I'm only going to ask you to do one thing for me, which is do some research and some thinking, combine those two, come back to this video and drop a comment down below with your dividend stock picks. Now, just so we're all on the same page, my picks that I'm about to run through are in fact dividend stocks that I already have skin in the game with, so I'm not just here talking the talk. I am walking the walk. And perhaps it is also important for you to note that each one of my dividend stock picks are actually based on my personal investor profile, which factors in my age and investment timeline, because if I were, say, like 64 years old, I would have an entirely different dividend investing strategy. So what you need to know is that I'm 30 years old with roughly 3 decades to go before I even really think about playing it safer. With all of that said, let's get to it now with my very first dividend stock pick, which is Apple. Now, some of you may laugh at this pick and really shrug it off as a dividend investment because you normally wouldn't even think of Apple as a dividend stock. However, it does pay a dividend and it has a solid dividend growth rate, which are 2 factors that matter the most to me, more so than the dividend yield at this point in time based on my profile. Either way, Apple was in fact actually my first individual stock pick and remains the largest individual holding within my portfolio that has provided me with the biggest ROI thus far when compared to all of my other holdings. Now, as for my rationale with Apple, well, first of all, I feel every investor ought to have at least one tech position of some sort, just given the nature of our ever-advancing technological future. But if I go a bit deeper there, Apple is just a company that has literally transformed the world and created something much greater than just a line of products. Apple has effectively created a lifestyle brand, and I will leave it to their slogan to really capture what they had the world do. Think different. Now, whether it's your iPhone, the MacBook line, the watches, the iPads, or any of these new health gadgets they have, Apple has successfully become a status symbol, all while continuing to produce products that keep their loyal customer base, well, loyal, and essentially just keep on buying the same old product year after year with questionable or laughable upgrades. However, here's the real power of Apple. Clicking into the stock chart, you're going to see that Apple soared by over 30% this past year, surpassing the S&P by leaps and bounds. Now, on the 5-year, over 225% worth of appreciation. But let's go a step further to compare Apple to the S&P with Vanguard's VOO there in yellow, which should be now your rationale to get tech in your portfolio for total return purposes. Now, let's continue to scroll down here, and we're going to see that Apple continues to deliver through on revenue after it just increased by about 2%. And of course, Apple maintains an incredibly clean balance sheet as well, with assets coming in at over $364 billion, just $308 billion in liabilities. Now, as for the dividend metrics, again, nothing crazy, but scoring a 99 on Simply Safe Dividends for a safety score. Now, the dividend yield itself is at 0.41%, which again, I know is small, but there's a lot of growth potential here. And as we scroll down, we're going to discover that Apple's payout ratio keeps the company intact here with their dividend at 15%, with a 12-year dividend streak thus far and a solid dividend growth rate here of 8%. But if you just can't get past that low dividend yield under 1%, I get it. Dividend stock number 2 then should be on your list. It's a powerhouse in its own right, but delivers through on a little bit higher of a yield, and that stock is United Health, which is the largest healthcare provider in the United States, with 2 segments at play here for the company. We got healthcare, but then we also are operating Optum, which is their own healthcare or care provider. And my conviction with this pick is quite simple. I do not believe that America's healthcare system is really going to evolve into anything of the likes of, say, the vast majority of the world, with healthcare being covered for all. After all, private big business is what the American way is all about, isn't it? And if you're someone out there now shell-shocked by Brian Thompson's murder, thinking that the whole industry is now going to be disrupted and changed, well, I personally think it's all just near-term noise that we should be shrugging off as long-term investors. Now, click into the stock chart with me. I want to go right ahead to this 5-year chart with you to see that United Health has been soaring. And now comparing it to the S&P, well, if it wasn't in the spotlight from all this negative press, it would have certainly outperformed the S&P 500 as well. Scrolling down, I want you to go ahead and take a look at the revenue streams coming in here, as it's generating plenty of revenue. And what's more here is that revenue has increased over 14%, all while the balance sheet remains squeaky clean, with over $273 billion in assets to just $174 billion in liabilities. Now, bear in mind, assets just also rose over 11%. And as for the dividend metrics, we're going to click into Simply Safe Dividends, another safe score here with 99, tad higher of a dividend yield at 1.67%, with long-term reliability thanks to a lower payout ratio at just 29%, which allowed for the company to keep up its 29-year dividend streak. But now have a look here at this 41% average dividend growth rate, which is just unbeatable and unmatched. Now, investors, there are my top 2 current picks as we speak. But before I cover the next 3, I want to ask for your help this new year in getting this number of the 56% of you who keep watching my videos, tuning in video after video, down to 50% at bare minimum. So if you're someone out there who just keeps tuning in and for whatever reason is afraid of the commitment to commit here to this channel and grow with me on this journey, now is your time to do it. Let me know that this content is also of value to you by tapping on that thumbs up button that lets me know to keep creating more content like this. But anyways, we're going to get right back to it here and get our eyes on the real prize here of this video, with a golden opportunity with waste management, which is in the business of trash collection and recyclables, which is actually a booming industry, believe it or not. And if we continue to consume, which we will, well, the more trash we're ultimately all going to have. And more than that, we need to transform this industry into a greener one. But Waste Management is actually also just one of 2 major companies that dominates the industry, creating really a monopoly-like opportunity for us all. So your trash, my dividend. In terms of the stock itself, we're going to go ahead and click into the stock chart to discover its performance on the year here. And of course, it's been up in the green over 11%, but it's the long term that we're all after. So clicking to the 5-year view, we're going to discover another dividend stock that, if it didn't recently slide, would have also outpaced the S&P 500, up nonetheless by 73%. And scrolling down, we will find that the revenue is pouring in, matter of fact, up over 3.7%, while the company itself maintains that squeaky clean balance sheet despite it being a trashy company, coming in at $32 billion in assets to just $25.9 billion in liabilities. Yet it's all about the dividend metrics, as you all know, so we're going to go ahead and click right into Simply Safe Dividends. We're going to find a dividend stock here with a safety score of an 80, so not too bad, along with the dividend yield coming in at 1.65%. The payout ratio, as we see it here, is coming in at just 41% after 24 years worth of shelling out dividends. And then most most importantly here is the dividend growth rate, which I'm keen on, and that's coming in at 33% of an average growth rate over the last 20-year period. Next up, let's go ahead and cover the one, the only Visa, which is a transaction facilitator that avoids all the lending risks entirely of the industry and then thus earns the revenue on every swipe when we go out there and spend money on our credit cards. Now, that means that the more all of us consumers are willing, capable, and able to spend, the better it is for the company, which is the better than it means for all of us as stakeholders in Visa. Now, naturally, as interest rates were on their way down, consumers felt more optimistic about spending, which is why we now see on the one-year chart that Visa started to climb. Now, over the last 5-year period, Visa remained consistently in the green during these years, even though the economy was how it was. And scrolling down, we're going to see that revenue and net income have both spiked up drastically by 10% and over 14% respectively. As for the balance sheet, also incredibly healthy with assets of over $94 billion, whereas liabilities remain at a low here of just $55 billion. And now clicking right into Simply Safe Dividends, we're going to get a safety score at a 99. We're going to get this nice dividend coming in at a low of 0.75%, so below 1%, but again, it's about the dividend growth for me. So recognize the payout ratio as we scroll down, 21%. We're going to get a 16-year dividend streak thus far, and then here we are with this average dividend growth rate here coming in at 18% year over year for the last 10-year period. But investors, if there was just one dividend stock that has the highest dividend yield on this list of these 5 stocks and that also exudes reliability, it would be, for me, Lockheed Martin, the world's largest defense contractor, with Uncle Sam, or rather the United States government and all of our allies, as their largest customer base, with countless deals being struck almost on a weekly basis. I'm talking millions and millions of dollars. Now, given people are people and the world is unfortunately just not a safe place, pipe dreams for it to be the ideal of no wars, Lockheed Martin is going to remain in business and pure gold for an investment. A matter of fact, Lockheed Martin over the years has actually experienced some really high highs here because, as we all know, wars around the world being fought as we speak, but it has since actually come down given tensions only seem to be right now cooling down. Now, it remains green on the year, but click to the 5-year view. We're going to see plenty more greenery there too. And just to show you the type of opportunity we're really talking about in terms of consistency, well, revenue flows in over year out. We're going to see over 20% worth of an increase in net income. As for the balance sheet, it's very clean with assets topping $52 billion, whereas liabilities are just sitting at about $45 billion. Now, let's go ahead and, of course, jump right into Simply Safe Dividends to see the safety scored in 84, the dividend yield coming in at 2.73%, whereas the payout ratio here works out to 45%. And as a defense behemoth itself, it's been rocking a 31-year dividend streak, but I am here for the dividend growth, or at least most interested in the dividend growth. So we get a 16% year-over-year growth rate, which is pretty solid. Now, investors, there are my 5 dividend stock picks that I would pick if I can only choose just 5 dividend stocks. And now I want to know which 5 you would pick. So go ahead and comment down below. Definitely tune in right here for a very powerful message that I got from a soccer star pro that he applied into dividend investing. So success on and off the field. Of course, subscribe if you haven't already. And with all of that, I'll catch you in the next one.